So in this video, I'm going to talk about everything that has occurred within the week 3 of February 2025. And I'm going to go deeper into how I knew when to reverse my bias, when to reverse my narrative, and how I mitigated Wednesday's PM session loss. But before we get started, for those of you who do not know me, my name is Stan Allen, and I've been predicting the Nasdaq since 2023, on to 2024, and on to 2025. And I plan on doing it for as many years as possible until I cannot mention the years anymore. Right here, you can see one of my documenting methods. I document all of the things live when I do them, or all of the lessons that I have on my X on the right side, and the newly created X for the Student Capital Mentorship is on the left side. That's where you will find information about my ongoing private mentorship. And I also want to state the fact that I have posted my private mentorship lessons on YouTube for free, one of my previous private mentorship lessons, and you can watch that inside of the playlist that sits inside of this YouTube channel. And getting into the video, we have the executions that I've did upon the week 3 of February 2025. The first one is instead of the AM session of the same day as the second one. So we have only executed within Wednesday, not because I did not see any price action movement on Thursday and Friday, but because I wasn't available to be in front of the charts on Thursday and Friday. All right, so the first thing that I look at in terms of determining when I want to see the market perform some form of a signature based on a weekly chart is the high impact news drivers. That is the first thing that I look at, because this gives me not how the market will perform, not in which direction the market will perform, but this gives me the when. So regardless of what narrative that I might have, this gives me the days in which I want to see the market perform, again, some form of signatures based on the red folders, the orange folders, and in some cases, like we've had this week, the white folders or gray or whatever. So for this week, because we've had the USD bank holiday on Monday, I never wanted to see some form of market continuation or some form of movement inside of Monday. So I would filter that out. I would not even look at that delivery. On Tuesday, we've had the A30 Empire State Manufacturing Index, but in the same time, I do not try and trade the day after the bank holiday because that can provide consolidations and that can be a problematic day in terms of my trading style, in terms of trying to trade the weekly distribution, which means that I will only trade within the weekly narrative and within the weekly bias. So therefore, even before I'm looking at a chart, I want to see the market perform something on Wednesday, Thursday, and Friday, more specifically Wednesday's AM session and also PM session, Thursday on 8:30, after 8:30, and Friday's flash manufacturing PMI at 9:45 and the 10 o'clock folders. So this was my analysis before Wednesday's trading occurred. This is the weekly chart of the Nasdaq, and my initial premise was that I wanted to see the market go higher with speed. The reason why is because, number one, I have stated to my mentorship students the fact that I want to see the market perform within the seasonal tendency of February until May second week. So that I wanted to see the market perform on the second week of February. That is when my yearly trading begins. And I would end it in terms of the seasonal tendency and in terms of what the market shows on May week 2. And as we can see, within January and February week 1, which is this week, the market had just stayed within a consolidation. And of course, we can try and trade these types of movements in terms of the weekly chart, in terms of the weekly bias. We can absolutely trade them, but I choose to avoid them if I do not have a clear macro target in terms of what the market should perform on a 3-month chart or on a 1-month chart. I try to avoid the instances when I do not have a clear one directional movement or where the market should go. But for this specific week, because I anticipated the fact that the market is going to go into this 75% BT 12-month Fulcrum standard deviation, and I know that's a lot of words, but I wanted to see the market go here. That's what's important, because this gives me the direction, which if I anticipate that, then I'm going to try and see this chart as bullish. So what bullish signatures should perform if I'm correct, and also what do I not want to see if I am incorrect. And this particular review of the week 3 of February 2025 is very important in terms of highlighting the fact that I have stated the things that I did not want to see and they materialized. And this is the beautiful example of what I would do if I see my narrative being wrong. And I was wrong within this weekly narrative, but I have shifted my perspective and I have adapted to the market conditions. But let me quickly explain what this 75% BT 12-month Fulcrum standard deviation level really is. So, if you're familiar with the concepts that I trade, this is a swing low, this is a retracement. Market had done this retracement for the sake of rebalancing some form of an imbalance or coming back into an inefficiency or in an inefficient price delivery. So what I'm going to do is I'm going to take this opening price of this candlestick or this closing one. It does not matter because it's in price. I will take this one and I will take this one. The reason why I don't take the wicks is because these are large wicks. So when this happens, what I do is I take the opening prices and the closing prices. What I do is I apply a fib from this opening price to this opening price, projecting the range above. So this range doubled or tripled or whatever, -1, -1.5, -2. I try to project that to the upside in terms of targeting in an all-time high market. And these BT levels are the distance between one standard deviation and the next, the 50% between the two, the 25% between the two, and the 75% between the two. So let's assume that this is a standard deviation and not a BT level. If this is another standard deviation and not a BT level, then what I would have is this, the 50% between them, the 25% between them, and the 75% between them. That's basically what a BT is. It stands for between targets. So inside of this particular week, in this instance, what I have anticipated was the fact that the market has created this low here. We saw the market closing above the upper quadrant of this wick and also the consequent encroachment of this wick, which gives me the fact that if I am correct and if I want to see the market go higher, then I would want to see the market open. Use these levels here as a means of quote-unquote support, as retail would see the market trading off a support level. We saw the fact that the market went back into this busy. So if we are correct, and if I want to see the market go higher, we also took a swing out here, then this should be balanced. So the market should not retrace back into this busy because the work has been done. This swing low should stay intact, this one as well. And we just have to continue hybrid speed because this would now become a balanced price range dealing range. So until we hit some form of a macro target to the upside, this should stay intact, which gives me the insight that within this week, if I am correct, then the market should only seek these levels, which means that we will create, by extension, if the market's lowest point would be only into the upper quadrant or the constant encroachment of this wick, which is the 50% of this wick and 25% of this wick. If the market does that, then this by extension will be a fair value gap, and I would want to see it open in the future if this is going to be a fair value gap, because that would give me insight that the market is strong, not even being willing to fill this up right now. And these were my rule sets in terms of where I wanted to see the market go. So I would not want to see the market go below the current low on Wednesday before we traded at 9:30. And if the market is going to do that, is I'm going to either stay sidelined because I am potentially wrong, or I'm going to try and reverse my narrative. So everything that I've talked beforehand with the swing low, with the balanced price range dealing range, with everything, gives me the insight of what I want to see perform, what I don't want to see perform. So if this performs, if the opposite performs, then I will do X. And this is how I do my analysis based on pure logic. I try to remove emotions as much as possible. So if the market occurs, or if the market performs lower and goes back into this order block, of course it is not problematic for a big movement. I would prefer for it to remain inside of this range, but if the market comes back into this and closes below this and then closes below this, which means that it failed, then I am potentially wrong, and we will go and attack these lows. Because remember, I've told you that I never wanted to see this low being taken because this has done its work. And based on the high impact news drivers that I have shown you in the beginning, and based on everything that I've talked about in terms of the weekly chart, then I already have the how the market should perform. I already know where at the 75% BT, and I already know the when, which is Wednesday, Thursday, and Friday. Right here, we can see Wednesday's trading. I have filtered out Monday and Tuesday, and you can see how the market just consolidated within Monday, Tuesday, and Wednesday's London session. This was my daily analysis before the market has opened at 9:30 on Wednesday, and coming back from a weekly chart, knowing that that weekly low that has been formed is going to stay in place. I wanted to see this fair value gap being left open because I never wanted to see the market go below this low in the first place, because this is the same low that has been seen inside of a weekly chart. So therefore, for this daily candlestick, I wanted to see the market go lower, use this busy as a means of support, which also correlates with the upper quadrant of the wick on a weekly chart, and this constant encroachment of the tail if it wants to go lower, or the upper quadrant, the 75% of this wick, if we are going to see the market perform higher with speed. I also wanted to see the market take on the current week's high, so an expansion higher for this weekly candlestick to become an up close and eventually go into my target. But if the market closes below the consequent encroachment of this tail on a daily level and on a 4-hour basis, then I know that I'm wrong and I'm going to look forward for this low to be taken, for this inefficiency to be filled, and if the market wants to perform lower, then this level of sell side to be taken. Taking said narrative into the 4-hour chart based on my bullish narrative, I would then see this as not a market structure shift, but a sell stop rate here back into this busy, coming back into it, making it efficient, then leaving it, which we would have to take on a swing high to make it balanced for the market to finish the work that it has done. So the market comes back into it, leaves it, and I would want to see the market take on this high so we know that this is now balanced until we get to this 75% BT. The market comes back into it, higher sell stop rate, so the market should not come here. One more quote unquote confluence for this low to stay in if we are correct. We closed above this inversion gap, so normally if we were inside of a bullish market, then this and also the order block should perform as support for the market to go higher. However, if this does not happen, if the market uses this 4-hour CB as a means of resistance and we see the market closing below the mean threshold of this order block, so the 50% of this, then I know that the market should take on this low, and then the next one is this one, and then the inefficiency below. So if the market closes below it, then I know that I'm wrong and I'm going to flip my narrative because this should not fail because of everything that I've stated. And if it fails, then it means that the market is going to take this low. And this is my 1 minute 950 1010 tape reading. So I did not execute upon this premise. And all of the annotations that I've did were because one of my mentorship students or two of my mentorship students were looking at this with me. I was unfortunately unable to do them vocally, so I did them on the chart. But basically what has occurred within this session here was market take on a level of sell side, 930 opening, buy stop rate. This would constitute a market structure shift on a bearish mindset, but I was bullish, remember. So I saw this as means of a sell stop rate, and my model states the fact that I want to see the market shift between 950 and 1010, and I want to see 3 PD rays being broken while it does so. So sell stop rate, this is where I'm looking. I saw the fact that the market only went into the 75% of this tail. Market closed above this, so this would become an inversion gap, and also my first PD ray in which I would want it to see the market fail so we can confirm our market structure shift. Second PD ray would have been this, or the mean threshold of this. It is almost the same price. Market closes above it, and then this would have been the third. And also this is on 50-minute signature that I wanted to see fail. So I wanted to see the market aggressively going above this, and also this would mean that this would have been a 1-minute market structure shift. So you can see how everything correlates into one perspective. But what I wanted to see if I was correct within my bullish narrative is number one, this low should not be taken because this was a sell stop rate. So the market had done the damage. Market structure shift here, it never happened. This never happened, never closed above it. I've stated the fact that this should have been a 1 minute Reaper inversion gap or a reclaimed busy. If we are bullish, and I would consider a long inside of this if the market would have closed above it and also taken on this high, which would mean that this would have been a market structure shift, but it never performed so. So the market formed a swing high here, closed below the 50% of this order block, used this mean threshold. Market went back into it once more, rejected it back, closing below this fair value gap as a SIBI. And right here, we shouldn't trade here if we were bullish. So the market went back into the constant encouragement of this tail. Market opens, goes back into the BC once, into the CB once more. Once more, this would have been my entry if I was bearish from the start, but I chose to take with this execution, quote unquote, or this price action movement because I did not want to trade on something that was not based on a weekly one directional premise. And if we were going to take this low, then I would have wanted to see the market go lower with speed into this 4-hour busy, and this 4-hour mean threshold inversion order block is the same price action or price level that is here. So the 50% of this order block, this is the level that I wanted to see the market close below and make it fail, so we can use it as means of resistance if we are going to go for this low or for this busy, which is also seen inside of the 1 minute chart. So this is the level here. So if you want to see that attack, then this is going to be used as a means of resistance on a 1 minute chart, and you can see how it also correlates with the 1 minute SIBI. This here and these here, these highs should not be taken because we have rebalanced this CB here when below a low. So this here, market structure shift, this should not be taken here also. Market rebalances this CB, so this now becomes an intermediate term high. So this should not be taken. Market comes back into the order block, leaves it again, not be taken. Market never takes it. So when we are trading here, we can take an execution if I was bearish from the start with the stop above this mean threshold, because if the market would have went there, then I would not want to see the market perform any bearish signature, and I would be grateful for the fact that I've had my stop here to stop me out from incurring a bigger loss. The market went back into the CB here, closing below or opening below the constant encouragement of this sell. And this is when I knew the fact that the market is going to go strongly to the downside. And right here, I have done the same thing that I've did within my weekly chart, which is I have deviated this range lower to 0.5, 1, which is this one, which would have been my final profit, minus 1.5 and minus 2, which also correlates the minus 1.5 with the constant encouragement of this busy, which is the 50%. Basically, we saw the market closing below that weekly level that I never wanted to see the market go back into, or I wanted to see the market rejected higher. Market opened, failed to reach that level, which tells me that the market is going to be weak until we hit this target. And I've also stated the fact that if we're bearish, I would want to see this as a breakaway. So this fair value gap, I wanted to see it remaining open if we were bearish. The market opened, went into the 75% of this wick, never touched this one. So this gives me the insight that the market is going to be weak. Hits the -1 standard deviation, and this would have been my final profit. But if we were to continue this execution, and if we were targeting the Tuesdays PM session sell side, then let's assume that we were still having a position going on with a partial here or a partial here at the constant encouragement of this busy. Then my stop would be number one, a break even when this target is met. Then I will trail it to when we're trading here because I want to be aggressive with my take profit. I never wanted to see the market go above this CB, this auto block opening price, and my stop loss would have been above the mean threshold, so at this upper quadrant of the wick, because the market could have performed back into the mean threshold a little bit above and then continue lower if we were wick. The market performed above my stop loss, and then you can see, or in this screenshot you cannot see, but basically we've had a market reversal to take on this high and then to continue lower later on within the lunch session. What we're looking at here is the PM session executions, and I'm going to go, of course it's the same day, I'm going to go into this executions more deeply. So based on my model or my model's rule sets, what I have anticipated, number one, is I was looking at the chart right here between 1250 and 1310. What this level is let me go back into a daily chart. What that level is this high here, so the current daily high. This is what I was aiming for. I wanted to see the market take that. This was what this level means, the current daily high terminus. So this is what I was aiming for. This is the London buy-sell liquidity pool, which is the liquidity pool that stands between 2 o'clock to 5 o'clock a.m. ET. This was left in place for the PM session, so that was a big targeting point for me. We've had the market shifting or not having a clear high to shift from in terms of the 1250 to 1310 macro. We've had this orange level as an inversion gap on an hourly chart. Market closed above it and went above it, so this gave me the insight, the fact that the market is going to go above this lunch session buy sell liquidity pool. So initially I wanted to see the market use this inversion gap here as a means of support, and I wanted to enter based on this, but not until we closed above it, then retrace back into it. So unfortunately I have missed this movement. Immediate rebalance here, market goes above the 50% of this here, so we can use it as a means of support. Fair value gap here once more, and we traded up into the lunch buy sell liquidity pool. So right here I wanted to see the market take on this low because we've already been above a major liquidity pool on a 15-minute chart. So I wanted to see the market only go below this and not retrace down deeper into a discount. So basically this would have been my first PDRA, which I wanted to see fail. The second one, which I wanted to see hold, or if it doesn't, then this I wanted to see it hold price and project higher towards this unrealized target and this target. So I've entered based on this sell stop liquidity rate and based on this auto block, and I have placed my stop at this immediate rebalance here. But later on I understood the fact that the market is going to want to do a deeper retracement, and I have accepted the loss with the fact that I'm going to re-enter when the market goes back into my initial desired entry, which is at this discount busy. So if you're looking at the execution, if you're looking at the recording, you will see me try and do a limit here when the market was trading around here, because I knew the fact that the market was likely to return back into a discount prior to continuing higher. But because I wanted to see this perform higher with speed from this price point, which was an unusual execution that I wanted to do, but because I have the medium of a demo account, I never tell you when to trade live, of course, but because I've had the medium of a demo account in these types of executions, I wanted to see something new. I wanted to see if I can use limit orders right here, and of course, I'm not used to it, so of course I'm going to take some form of loss for me to understand why I have lost afterwards. But I wanted to see if I could use limit orders, and eventually I have taken this execution here. Normally, I if we were going to run from this price point right here, then I would have wanted to see this being left open as a sign of speed. But because the market did not do that, and because the market retraced back into this and also took a level of sell side here, then because these were unrealized targets, I wanted to see the market perform higher into them from this busy, knowing that this is just a retracement run back into a discount so we can continue higher. Market went back into the busy. I placed my stop here because I wanted to see this being left open, but if it wasn't, then I wanted to see only the low of this fair value gap. And if the market would have went back into this wick or into the constant encroachment, then I would have known that I was wrong. What the market did is it went back into this busy here, ran away from it, taking on this swing high, which gives me the fact that the market should not return back into this range because the damage was done and the work was done. And eventually we take on this high and we take it with speed into the long session buy side liquidity pool. And the reason why I took all of my position off here is because of me not being able to be in front of the charts at that time period anymore. This is the execution that I've talked about in terms of the PM session. I'm not going to play it right now, but you can look at it into my YouTube channel. I wanna see if this works. This does. Okay. This is the AM session tape reading, which is available on my YouTube channel also. And this is what the market has performed afterwards. So this is how the week performed after the market closed, and everything that I did not want to see the market do, it did it. So I'm grateful for the fact that I've been able to see that I was wrong and utilize that information for a profitable tape reading and also execution on the PM session of Wednesday. Unfortunately, I was not able to look at Thursday and Friday, which was absolutely beautiful in terms of price delivery on a bearish perspective. This was Thursday, this was Friday, beautiful bearish delivery below this inversion gap. And this is the 1 hour chart and how the AM session performed on Friday. This also on Thursday, and this is Wednesday's trading, where we framed the market going back lower into this low, and then we framed the PM session here into this high. This was the long session buy side, and this was the previous day's buy side liquidity pool. Hope you guys enjoyed this one. Make sure to join the free Telegram where I document everything in real time, which is going to be in the description below. And I will see you the next time.